Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'll be taking you through what is happening, what has been happening in the markets, and of course, what to look for this week. So we've been having quite a bit that's been happening, but of course, the main things that we've seen this week is that the tensions over in Iran have over in Iran and Israel. We've seen that at least the market has recovered steadily from those tensions, and of course, we are seeing that through what we are seeing on the with the fear index, and of course, even the sharp recovery that we have also observed with the stock indices and some of the stocks. Now, of course, we also know that some of the things that we have also been able to see is uh, that a number of the US stocks, especially for those of you that trade indices, you must have observed that a lot of them have been reporting earnings. And of course, the earnings have been sort of bittersweet. We have had a number of companies, of course, giving fairly, poor guidelines, and of course, others giving us good guidelines. So, of course, let's start it off by looking at the fear index, which of course is the VIX. Looking at the VIX, really, we can take one thing from looking at the VIX, and that there seems to be some kind of calm that has returned to the market. And of course, if you look at the VIX today, you'll notice that it is now trading down about 16%, around 26% from its peak that it had at the height of the tensions that we had with Iran. So at the moment, VIX is down about 27%. Giving us signs that possibly maybe the tensions have reduced a bit. The highest point that VIX had reached was this point here, which was the same point when we had Hamas attacking Israel. If you guys recall, in October when Hamas attacked Israel, there was that sharp reaction to the markets, but immediately we saw that the market started moving back down from that high. And of course, even uneven greater high was created when we had the Silicon Valley banking crisis. But at the moment, we are seeing that things are looking quite good for risk on assets. Yesterday, we also had a bit of news, like the PMI data, which came out and of course provided a lot of strength for the US indices. And generally looking at the US indices, a lot of them are actually trading relatively higher, but of course, most of them are still down from their record levels. So we are still in some kind of a temporary downtrend by the look of things. Now, of course, for those of you that maybe trade indices, one of the main things you have to know today is that the DAX has also been having a steady uptrend, and this is likely to continue. Of course, if we don't get any escalation of any tensions, if tensions not keep coming back. Now, just a bit at to look at snapshot and see how the prices are doing fairly in the markets. We'll start it off with Forex. So for Forex, we have been seeing some recovery for the Euro USD. Euro USD has been making a really good recovery, but of course, later in the week we have the GDP for the US. I think it's coming out tomorrow. And of course, if we have a strong GDP, then it's likely that we are most likely going to get a weaker Euro USD and possibly even a weaker GBP USD. But the dollar index was on a steady downtrend from yesterday. And of course, I'm thinking that's the reason where we saw that strength that came in for the GBP USD and for the Euro USD. But at the moment, if you look at the dollar index, of course, you notice that it is still trading much, much higher from its levels that it created around the day when we had the CPI. So it is holding on to its gains, and at the moment, it looks like it's forming some kind of a wedge, and that falling wedge might present an opportunity for us to see a stronger USD that could potentially see it moving higher to this level. Now, keep in mind that we also have the Federal Reserve Conference soon. It's going to be on the 1st of May. So that Federal Reserve Conference, if we get a dovish stance from oil, it is going to provide us a lot of opportunities for us to sell Euro USD and of course sell GBP USD. Back to the snapshot for the prices. We're also seeing USDJPY, USD CHF, USD CAD, most especially USD CAD. For those of you that are trading USD CAD, you notice that it's already trading below record levels. It fell more than almost 500 pips from record levels and is now trading at about 1.36781. And USDJPY, as you'll also see on the charts, is also looking fairly strong, but it's like that it's also going to start pulling back. Now, of course, I've talked about the US indices, crypto. Again, don't forget that you can trade crypto with FX Pesa. All the cryptos are available for you on your MT5. And of course, I would recommend that you use the Premier account when you're trading cryptos, but they're all available on FX Pesa and you can be able to trade them. The crypto market is also looking relatively bullish. And of course, we had the Bitcoin halving that took place last weekend, I think on Saturday. And of course, we didn't see that much of a reaction from the cryptos. The past halving events have caused extremely bullish momentum for the cryptos, but something that we didn't observe with this one that we had recently. So we just have to keep waiting to see what happens as we go along. Looking at the economic calendar for today, and of course, what you guys need to know for the data for today. Today is not going to be that much of a busy day data-wise. We only have maybe the crude oil inventories that are coming out at 5:30, and of course, the crude oil inventories will present to us some indication of what is happening with the strategic petroleum reserve for the US. The strategic petroleum reserve for the US has also been having signs of depletion. But if we see higher inventories, then that is going to provide us some selling for the oil price. Oil prices have also been falling, and I think they still have more downside momentum to come in over the next few weeks. And of course, the reason for that is that the tensions over in Iran and Israel have kind of come down, and we are seeing that war risk premium for a lot of these commodities is being discounted. If you look at crude oil, if you look at gold, if you look at silver, most of them are already on their trip all the way down. Going into the US session, which of course is going to be the interesting session to trade, we again do not have that much on the calendar. And of course, we might want to cross to the earnings. So before I go to the earnings calendar, I want you guys to have a look at Tesla. So Tesla yesterday reported earnings, and the earnings for Tesla were relatively good, only that their quarterly revenue fell for the first time since 2020. Tesla is actually up 10% pre-market. The reason why Tesla is up 10% pre-market is because of one reason. Tesla has indicated that in Q1 2025, they are going to look into producing cheap EV options. Okay. Now, one of the reasons that has been the impediments for higher revenue for Tesla has been that the prices of their cars have been absolutely high for the average consumer or the average car buyer, and it has been inhibiting increase on Tesla's revenue. So Musk, in his guidance yesterday, indicated that Tesla is going to look into making affordable EVs, which again to investors is a good thing because it will help to prop up the value for the stock, but it will also help the stock to recover. And it's not looking that great when you look at it on a year-to-day basis. But of course, if you look at what Tesla has been doing over the past period, its price has not been performing as good. So I expect that we should see a relatively stronger Tesla price as we go into the rest of the year on the hopes of those affordable EVs. Now, in addition to that, there's also some news that I saw regarding Tesla. I don't know if you guys saw that video that was moving online. There's a video that was moving online, I think sometime last year. that was showing these robots shooting. They were doing long range shooting, and of course, you know, these are humanoid robots, so they were doing long range shooting, and it was really giving us some kind of indication that you know, Tesla might be ready to start you know, selling robots to the mainstream consumer. And of course, we are seeing here that the humanoid robot is going to be ready to sell by the end of next year. So all that, I think, is providing investors some kind of confidence that there are going to be extra revenue streams that may come and increase the bottom line for Tesla. Okay, so before we go to MT5, I just want to show you guys something regarding gold on trading view. So regarding gold, I just want to put for us a box here so that I can show you the kind of zones that we would expect gold to revisit over the next few weeks. Now, first of all, if we look at a weekly candle for gold, we notice that gold has taken out the work of the 2 previous weeks, looking at its current weekly candle. Okay, at the moment, gold is down about it's down about 6% from the peak, but gold is still up really quite a bit. If you see from when it started rising high from 2020, rather from 2000. Okay, from 2000, when gold broke out of this wedge that it was in, it broke out of a falling wedge around here, and when we saw it breaking out of that wedge, gold was able to rise as high as this. Okay, so we saw it moving all the way from here, and of course, it made a move of about 21%. So at the moment, gold is down only about 4% of the 21%. And if I look on the daily, what I would do is that I would just want to add my box, my fib box around here, uh, from around this point here, and add it all the way there. Okay. So now when I add my box there, it's ideally going to show me how gold is looking like. Now at the moment, gold does not look, it doesn't seem like it has had a very good retracement as yet. Of course, I would expect that before we see another wave higher for gold, we should see potentially coming down to that 0.5%, 0.5 fib level, which is around 2,210. You can see that gold already created a double top around here. It's that we are in some kind of bearish momentum for gold as you go along. Now, going on a lower time frames, you see that the bearish momentum actually builds even more, that we are in some kind of a descending channel, and gold looks like it's ready to possibly start coming down to that, to entering into that discount zone. So looking at it in terms of premium and discount, gold is still trading at close to record levels, and it is discounting those fears. The last time we saw gold like this was when the tensions eased a lot. So we should see more, especially for opportunities for trading today. We are going to see that when we cross over to the MT5. So if you have any questions, let's cross over to MT5 so that we can see what trading opportunities we have today on the charts. See. Okay, so this is our MT5. We're going to start with the NASDAQ. So the NASDAQ, we saw it recovering very, very nicely on Monday, a recovery that took us all the way up here. And I'm expecting that we should see the NASDAQ creating a lower high, possibly close to that 0% fib level, which is around 17,707. So today we have Meta platforms releasing earnings. If the earnings from Meta are strong, then we are going to potentially see some more strength for the NASDAQ. and we should see it accelerating even higher. Now, for trading today, if you're going to be trading today, you might want to look for some potential sells on the NASDAQ into the US session. My thinking for that is typically before earnings, NASDAQ always sells a bit, okay? It always sells a bit, and we should see at least the NASDAQ possibly retracing back to this zone somewhere around here. Uh, uh, and of course, it's at this point here that we will then see potential buys. If Meta Platforms earnings are good, then we are going to see the NASDAQ possibly moving higher. But for now, I'm expecting us to see some kind of retracement, at least back to this area here, and then we can look for a potential buy on strong earnings. This is for NASDAQ trading today. Now, let's cross over to gold. So on the Dow Jones, I don't really have much because there are not really a lot of companies that are reporting today for which may affect the Dow Jones. However, looking at the Dow Jones, we were in a corrective trend that started all the way this way here. And of course, that corrective trend took the Dow Jones all the way down to this area here. But at the moment, Dow Jones recovered very nicely, and we are seeing that it is now in a steady rising trend that should take it even higher. However, since we're up quite a bit since Monday, I do not expect us to end the week very, very high. We should see the Dow Jones possibly also retracing a move that will possibly take us at least back to 38,245. Now, crossing over to gold, this is what I have for gold today. So for gold, let's first put things into perspective. Let's first look at the demand areas for gold. Now, last week on Monday, when gold got into this area here, there was a very sharp liquidity sweep that took gold all the way back into this rising channel, okay? Now, when gold got into this rising channel, we then saw it steadily rising and it formed a bearish flag. So this bearish flag was broken around this area here, okay? Gold broke the bearish flag at 2,386, a move that took gold down skidding by about over 800 pips, okay? So now, what happened is that gold did not manage to hold price action at this demand zone, okay? Soon as gold got to this area here, we saw it breaking below that demand zone and trading all the way down. Now, the next demand area for gold, is where we had the NFP, which is somewhere around 2,300, okay? So you notice that gold, when it got to 2,300, it was able to rise immediately, okay? So we took out this demand zone at this level here, which is around the midpoint of the fib level, around 2,340, broke very nicely below it, and then continued to the next demand zone, which was at 2,300. So if gold continues selling, it has to take out that demand zone. If it does not take it out, then it's not going to manage to get back to this area here, which is around that 100% fib level. So at the moment, I think gold, we need to look for sells. Reason being, gold is in a corrective trend. However, it is holding demand at 2,300. So what I would do if I were you is that I would set a sell stop at 2,300 so that in case gold breaks below 2,300, then you'd be looking for an opportunity for you to maximize and move even further lower. Okay. Now, looking at the price action for gold, it looks like it's holding price action very nicely and steadily in some kind of a choppy trend, okay? And we are seeing this as of today morning. It's holding a choppy trend around here, and it has formed some kind of an asymmetrical triangle. So we need to wait for what happens. Either demand kicks in like it did on the 15th of April, and we see gold rising steadily, taking us back to this level here, to form some kind of a lower high that then can allow gold to have a fresh selling momentum back to this zone. And if that fails, then if we break below the symmetrical triangle here, it's going to take us back to this demand zone, which we're able to buy from on the 23rd of April. If we reattempt and manage to break below it, our sell stop will allow us to then benefit from a move that can take us below that fib level and give us a move about 500 pips that takes us into this area here. So at the moment, that is what gold is looking like, and we just have to wait for how price action kicks in. Now, one of the things that gave me confidence for a sell for gold this week was that gold was able to create a very nice and neat bearish flag that it broke below. And once it broke below that bearish flag, gold was able to sell for as much as 900 pips. So this kind of indication gives us a very clear sign that there is some kind of bearish momentum for gold that will continue as we go into the week. Now, going over to Euro USD, Euro USD has created a rising wedge. A rising wedge is typically a sign of bearish momentum, and we shall be looking for a sell for Euro USD the moment we just a moment, guys. So we have a break of rising wedge on the H4 around 1.06710. Okay. So break of a rising wedge for Euro USD would then give us an opportunity for us to have a sell for Euro USD that will take us as low as 1.06140. Tomorrow we have the GDP data for the US. If we get strong GDP data for the US, then then we should potentially be looking for a sell for Euro USD. And of course, the other thing is that so we have a potential sell on break below wedge. Okay. Yeah. So potential sell on a break below the wedge. That's what we can expect for Euro USD. And of course, that wedge, we should get a break of that wedge around that area there that I've showed you that would take us all the way to this zone. Now, rising wedges are very, very reliable because they are typically used in technical analysis, and they are very, very reliable. So you can use them for your trading. So if we see a break of that wedge, we are going to see Euro USD moving all the way down here. And of course, again, like we discussed last week, I think I must have told you guys that Euro USD was in a steady downtrend. Okay. So this steady downtrend, as you can see, we were able to hold support along this level here and rise very steadily. But there are no clear signs whether Euro USD is going to manage to hold support. If it fails to hold support along this level, then we shall be able to get a move on the break of that wedge that should give us as many as 100 pips. Okay, so that's my setup today for Euro USD, and it should be at least one that would give us some moves. Now, looking at the momentum, if you zoom into the candlesticks, you'll notice that the momentum for Euro USD is looking fairly bearish. And of course, you can see that we were also able to see that it created a higher high around here, indicating that there are signs for temporary bearish momentum for Euro USD. So I would then want to go in for an initial sell, but the best sell would be once we break that wedge. So soon as we break the wedge, then we can get a nice big pullback to take us back to that support zone and even lower. Now, crossing over to GBP USD, GBP USD has also held support on the higher time frame. If you go on the daily, you notice that we're able to hold support and actually break above it. Actually, no, sorry, my apologies there, guys. We actually didn't hold support for Euro USD, for GBP USD. We broke below it, right? We broke below it and we came to this 100% fib level around 1.23260. So you notice that on the daily, once we achieve this zone, we're able to rise almost immediately and take us back to this area here. But the descending channel for GBP USD is still reliable. And you notice here that actually price action is still looking fairly bearish for GBP USD. When you cross over to the H4 time frame, on the H4 time frame, we have failed to break structure around this area here. Okay, I was expecting GBP USD to possibly reach that golden ratio zone around 1.25500, a move from that break of structure that would give us about 75 pips. And of course, that didn't happen. So the fact that we didn't break that structure around that area there, which is around 1.24, that's about 1.24600. Okay, so we didn't break structure at that level, and since we didn't, as of this morning on the H4 time frame, we are seeing that 8 a.m. candle is looking mighty bearish. Okay, and should we have an open of the 12 p.m. candle below that 8 a.m. candle, it's going to give us a sign of bearish momentum. So we would then be looking for sells for GBP USD that would then see us attempting to sell it all the way back to that area of support, okay, which is the 100% fib level. That's a move that would get of about 120 pips. Now, if we break structure here, the next level for GBP USD is going to be here, which is around that fib level of 1.25370. But I don't think this is going to suffice. The most likely scenario is that we see price reversing and moving back down. Okay, so let's cross over to USDJPY. Now, for those of you that are not aware, the Bank of Japan is having its monetary policy conference this week. That is going to take place, I think, on either Thursday or Friday. I'm not so certain, but I think it should be on Friday. So on Friday, I'm going to be the one handling the market snapshot. So we shall be able to see what happens with USDJPY. However, I've added my Fibonacci retracements here, retracements and extensions, and I've set them at the last demand zone for USDJPY on the daily, okay? And this demand zone is somewhere around here, where we're able to have price holding structure above 150 yen, okay? So you can see that for some reason, price failed to break here. And when we had very strong CPI, we saw USDJPY rising very strongly, a move that gave it about, this was a move about 300 pips, okay? So by looking at it on the daily, you'll notice one thing. It seems we're getting less momentum to the upside. So it seems as if price is starting to hold or consolidate at this area here. It could be because the DXY has stopped moving higher, and it could also be that traders are cutting back on their bullish trades for the dollar. Okay. Now, when you move to the H1 time frame, on the H1 time frame, it will give you more perspective because you can see that the consolidation is actually more visible here. Okay, we have been consolidating from Monday all the way up to today. We have been in some kind of a steady uptrend of sorts, but the steady uptrend is still showing signs of consolidation. Okay, so now what I would expect for USDJPY is you might want to look for buys with very, very tight stops, okay? Buys with very, very tight stops. So ideally what I would do is that I'd be looking for potential buys upwards to 155. And of course, if we fail to move 155, then it's likely that we can get it moving lower, okay? So the other thing, of course, is that I've observed that we're also having a lot of sharp movements down on price. You can see these candles, guys. I think these candles are very visible. If you've been looking at these candles here, we're having a lot of candles that are showing us a lot of liquidity sweeps, and of course, indicating that momentum is starting to reduce substantially. So what I would do for USDJPY is that I would look for buys, but I would set my stops extremely tight, possibly around these areas here. Your stops should not exceed maybe 20 pips. Okay, they should be quite tight. Okay, 20, 30 pips, somewhere around there, because it's looking very, the price action for USDJPY is extremely choppy. Okay, so on Friday, after the bank conference, we should see USDJPY starting the corrective trend that should take it down to 154, possibly even 152. Those are my thoughts. Okay, awesome. So question time, guys. If you have any questions, now is the time. Now is the time for us to go over your questions. Question time. If you have any questions, guys, you can drop them in the comments. Then we can be able to handle them. Awesome. Guys, for those of you that do not have trading accounts with FX Pesa, we have a link in the description that can allow you to open up a demo account to test your trading skills. But of course, if you know that you're ready to trade, don't forget that you can also open up a live account. I would recommend you guys open up a live premier account, which is like one that I have. The premier account is good because it has very, very tight spreads and is typically the best for trading. Don't forget as well to also FX has different socials. We have a lot of exciting information for you. For those of you that are in Kampala, don't forget to also attend our Pips and Branch Traders event, which is taking place on Saturday. Awesome.